unless, of course, I get a cough, then I get scared to death about the coronavirus, it sounds like. That's messing up the markets this morning as well. Let's go downtown to the offices of Statler Financial Services, check in with Phillip Statler, and see just how ugly the reaction to the coronavirus is at the moment. Phillip, good morning. How you doing?
Good morning, Dave. Hey, I am doing well today. I hope you are too. But hey, we are seeing some red ink this morning as we get ready to look at the market open.
Absolutely. I mean, it was a good day yesterday. Dow was up 275 points, NASDAQ up 87, Standard & Poor's up 21. All three set new records. And then just about closing time, word came out that China has a lot more cases than they expected, and you and I were both not experts on Chinese geography, but a whole nother city got mentioned in it as well, and that kind of put the futures into a tailspin, didn't it?
Yeah, I think it did, because again, it becomes the uncertainty, and let's face it, the stock market does not like uncertainty, and until we get this thing contained, and under the World Health Organization comes out and really tells us what's going on, I think it's going to be one of those things where, hey, the headlines look good, the market's going to go up. Headlines look bad, market's going to go down. It's just one of those things that's going to increase the volatility.
Absolutely. One of those axioms you and I have both said for eons now is that even if it's bad news, the market just wants to know for sure. And when China says, oh, yeah, by the way, we got another city with 10 million people in it we're going to wall off and put under quarantine, that kind of goes over like flatulence in church on the futures market, doesn't it?
Yeah, it does. They just don't like it. They want some certainty. If they came out and said, hey, we're almost close to a vaccine, man, you'd see the market take off again.
Oh, boy, would it ever. Starting out the morning with the usual data dump stuff out of the federal government for a Thursday, first-time unemployment claims. Everything still looks like it's going great on our employment front. First-time claims were up by 2,000, which meant only 205,000 claims last week. That's still abnormally low. Wage growth in January was up by 0.1%, less than we'd like, but growing. And we got consumer inflation relatively well under control, too. The CPI was up by 0.1%, and it sounds like the market expected worse than that, didn't it?
Well, they expected it to be up 0.2%. So yeah, so the full CPI was a miss. The core CPI, though, it was in line at the 2% number they were expected. And we look at job claims, the first-time claims. I mean, that was less than what was expected too from most of the economists. They expected like 211,000. So to me, those numbers look okay.
Yeah, we got no major problems on the economy. So, when we look at the futures this morning, I think the first words I said to you when you got on the phone was, okay, is it coronavirus or is it profit taking? And you and I both kind of look at the curve on the futures and say, yep, it's that danged virus over in China that's giving us our grief, right?
Exactly. So, hey, I did see a headline I want to mention real early. I didn't tell you about this one, but I know you're big in the radio industry and been there for a long time. Mm-hmm. And we talk a little bit about the newspaper industry every now and then, but one of the publishers, McClatchy, filed for bankruptcy. They're the third largest publisher of newspapers, I think.
I was going to say they're one of the monsters in the business. Bankruptcy for McClatchy?
Yep, they filed Chapter 11 today.
Wowzers, that's a scary thought. I mean, ink has its difficulties with the circulation and the overhead required, but an entire chain going toes up, that's not good news in any media, even with newspaper being a competitor to radio.
Yeah,
it's just not good. Bunch of stocks reported, and some of them kind of surprising this morning, right?
Yeah, it is, and I'll be up front. My tip sheet's a little chaotic today. It didn't come out in this regular format, so I'm having to guess a little bit here as we get started. But Pepsi was the first one that kind of came out today, and they had a good quarter. I'm not sure what they beat on earnings, but I know their revenue beat forecast, and I know that their organic growth, which is one of the key things that they look at in both Coca-Cola and Pepsi, is their organic growth. And their organic growth came in at 4.3%, which was better than expected. They expected about 4%.
Organic growth, let's define that for folks. Organic growth, when we're talking finances, we're not talking about them selling all natural soda pops or anything.
Exactly. So they're just growing their product line. They're not, in other words, they're not growing their product line. They're not adding new products. they're growing their existing product base. More people are buying that and creating more revenue.
I thought the definition was necessary. Yeah, basically it's their core product growth.
Yep. So they're up about a third of a percent this morning. Actually, they are bumping right up against their 52-week high.
Not bad. But big surprise in the bunch you and I were talking about beforehand, give you a chance to flip to it, was Cisco Systems, the big computer hub maker. We had everything looking good, beat the street on profit, beat the street on revenue, but I'm looking at them down like 5% this morning. Boy, does guidance cause you a difficulty, huh?
Yeah, they really do. You're right. They beat on earnings per share. They beat on revenue. Everything was good for the last quarter, but they've looked ahead in the current quarter. They're warning that their revenue will probably drop as much as 3.5% from what was expected. And they're blaming that a lot on the global economic uncertainty and some slowing technological investment right now. And so you're right. They're down about 5.33%.
Honestly, that kind of surprised me with all the 5G build-outs going. I figured that Cisco probably would be selling their high-speed products an awful lot better. I'll bet you the coronavirus has something to do with that too, since a lot of assembly is done over in China.
And that could be, yeah, that could be. They didn't say that specifically. They just said the slowing of technology investment from companies. And we've talked about that a little bit last year, how the consumers was driving this market, not the business. Business is slowing down. They're more guarded about what they're buying. They're not spending as much. They're trying to protect their bottom line. And so that could be weighing on Cisco.
Understood. That I notice is one of the Dows, so it's dragging the Dow down more than a little this morning. When we get to the percentages, folks will see that. Other indications you got?
Well, we do have a couple more. We had AIG Insurance. They beat by 3 cents a share. They saw smaller catastrophic losses, which is always good for an insurance company. And so they're trading up 2% this morning. And they're in the higher area of their 52-week. They're not quite there yet, but they're getting closer. Let's talk about Tesla for a minute. Tesla didn't report, but Tesla's getting beat up pretty big this morning. They announced either last night or this morning that they are going to go out and sell another $2 billion worth of stock. They need more capital coming in, and so they're going to raise money. And so they're trading down today almost 4%, which is better than what it was because it was down almost 5% earlier this morning. And so that's weighing on Tesla today after it had a big run up.
A company that's led by a character like Elon Musk, if they know exactly what he's got in mind, it'd make a difference. But the guy has done just enough flaky stuff over the years to the point where, wait a minute, what's he doing? Buying more weed? I mean, you don't know with this guy. So the market is not overly impressed by him going back and saying he wants more money without exactly defining what it is.
Yeah, that's right. I mean, that's got to have the investors concerned a little bit. And so, especially because it had such a run up here the last couple of weeks. So the next one I have is Generac.
Yeah.
We're really familiar with them here in Florida, right? Because, as a matter of fact, I saw in my neighborhood yesterday, one of the electrical companies coming in with a big Generac generator. They're fixing to put in a whole house generator. And so that's what they're really, at least that's what we know them for. Is their generators. They were 17 cents above what was expected. Revenue was also above the street. They had 9.7% increase in residential sales.
Wow.
Exactly what I'm talking about in my neighborhood, right? And
all those ads we're running for Generac generators really are doing some good, aren't they?
Yep, they are. But on the flip side, though, commercial industrial sales fell about 2%, almost 3%. As we get ready to go today. So they're trading down a little bit this morning, about 0.6%. The probably the last one I'll leave you with, Dave, is TripAdvisor.
What's the word?
Yeah, TripAdvisor, they beat by about 5 cents a share. Revenue was above forecast. And I think maybe they're weathering the storm a little bit here because they are, at least they were heading up. Yep, they're still heading up. 3.2% this morning. So So I think maybe some travelers are shrugging that off, and it's not hurting them quite as bad, or they're bouncing back a little bit.
Or the expectation is folks are going to check TripAdvisor to see if there's been a virus outbreak
Well,
in the hotel they use.
that's true, and which drives their advertising revenue, right? Because more people are coming in that way.
Absolutely, maybe more expected usage. Glad to hear one travel-related company is doing well. Anyway, resetting the table for the morning. It was green ink yesterday, but starting about 4:35, 5 minutes after the markets closed yesterday, things started going south off that news over China. 45 minutes before we start throwing the real money around, Phillip. How bad does it look this morning?
Well, it's looking pretty bad. I mean, most of the way we're 0.5% or more off of our yesterday's close. Right now, we've got the Dow down 160 points, a little over 0.5%. We've got the S&P 500 down 16 points, about 0.5%, and we got the Nasdaq down 63, which is about almost 0.75% down.
You know, it's kind of interesting. I'm looking at those numbers. They're a little bit better than the delayed ones that I've got. Maybe the economic news is going to take some of the bloom or some of the dead rose petals off, and we might actually have not as bad an opening as we're afraid of.
Well, and that could be that we're seeing a few more things on the earnings front. There's more earnings than what you and I got through today,
Sure.
and that could be affecting it before the market closes or opens too. And we do have green ink across the board when it comes to the commodity side of things. We've got gold; it's up about 0.5% to $1,578 an ounce. And we've got silver really making some strides this morning, up a little over 1% to $17.68 an ounce. And then we got crude oil up about 0.2 to $51.27. I noticed today on the way in, gas was down about 6 cents a gallon as I passed by one of those service stations.
Ooh, let's go for the gas line, shall we?
Yeah.
Overseas markets, Asia generally trading off of the news you'd expect based upon the coronavirus news this morning. All those markets were in the red. Europe also in the red. England's got its Brexit doubts happening. They're really taking a bath this morning. They're down by over 1.5% halfway through their day. Phillip, this is another poster child moment. We were up yesterday. Suddenly we're down this morning. If retirement's getting close, that's got to be scary. Time to get an appointment with you and get myself insulated from that risk.
Absolutely, Dave. Folks can give us a call at 863-382-0037 to get a financial x-ray of their current portfolio to make sure they don't have too much risk. Catch us online at statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 7:30 a.m.
All righty, and back again to tie the ribbons on the week tomorrow morning here on Light. Phillip, thank you so much, and we'll catch you then, all right?
All right, man, you have a great day. I look forward to talking to you tomorrow. Friday, we'll end up the week.
You got it. Be well, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Passengers.
Hey, folks, I want to thank you for joining us today. I hope you have a great day. Remember, if you're in that retirement danger zone, 10 years from retirement, 10 years after retirement, give us a call. You need to make sure you're not making any missteps. 863-382-0037. Have a great day. I look forward to finishing the week with you tomorrow. Bye now.